Okay, hey everyone. Mark here, Mark Pre-Markets. Hey, thanks for joining me for another Bitcoin video technical analysis session. I am multi-streaming, simul-streaming, whatever you want to call it, on TradingView and on YouTube and all that stuff. So, of course, that means I have to follow house rules. So, welcome to the stream. I see a bunch of questions. I'm going to get to them. Thank you for joining me. If you're new to the stream, please make sure well, first, let me explain how it works. I'm going to run through the economic calendar. Then, after that, I'm going to go through my Bitcoin analysis. I'm going to try to keep it as brief as possible. No 30-minute analysis today. Okay, I'm going to try to keep it in less than 10 minutes. Hopefully, that's possible. And then, after that, I will get to your questions. So if you have a question, please ask it in the channel now. Okay, if you'd like to see an altcoin or a stock, just please put the symbol in, one symbol per person, please, so that I can get through as many questions as I can. My goal today, or my promise, is I'm only going to go for 1 hour, okay? Not 2 hours, 1 hour. So we have to keep, make sure that I keep my mouth shut after an hour. All right, so let's get this thing started. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, let me get to let me turn off this screen here. Just give me a moment and we will get to what we have to do here. Okay, there we go. And you guys should be able to see me. Hold on, let me adjust my microphone here. Hold on a second. Hold on 1 second. All right, that should be better. All right, you guys should be able to hear me. Okay, cool. So good to see everyone. All right. So here, let me just go back to the chat. Okay, cool. So, hey, let's just say a few hellos. We got Dan, good to see you. Peter, Dan, Bill, Elizabeth. All right, Winter, Mr. Plow, all my regulars. Schwartz, International Man of Mystery, of course. I can't do a stream without him being here. I got Alex. Okay, cool. All right, so as all of you know, I wrote an article yesterday on TradingView, and so you should always read those when you get a chance. I publish one every Sunday, and I put a lot of my thought and a lot of my insight into what I'm expecting or anticipating based on the information that we have. All right, so first things first, before I get into that, I'm going to just take a look at an economic calendar real quick. You can use the one from TradingView, that's fine. I just like to use this other one, which is off the screen, because it's just very brief and it just focuses on the most important events. And that's all I want to see. Okay, again, the economic calendar, the point of it is so that we're aware of any major news reports, because they can be a catalyst for a range expansion, okay, random range expansion, and we don't want to get caught in something like that. So it's important to just recognize what's coming out. Like, for example, people ask me, well, what reports do you look for? I'm looking for major, like FOMC, Chairman Powell testifying, NFP, that kind of stuff. So let's see what we have. On 4/5, that's tomorrow. All right, we have the Royal Bank of Australia rate statement and their interest rate decision. Obviously, that can affect the Aussie dollar. Then we have, for the U.S., ISM manufacturing PMI. These are usually not a big deal. On 4/6, which is Wednesday, we have the FOMC minutes. That usually comes out around 2 p.m. Eastern time, or 2:30, something like that. That's, again, it could be important if there's a surprise in those minutes that the market overlooked. So sometimes you can get a gyration, something like that, especially in the S&Ps and things like that. So you want to keep an eye on that just in case. Again, you can't trade on these things. Also, we have trade balance month over month for Australia. On the 7th, which is Thursday, we have Europe retail sales. Again, not a big deal here. On the 8th, we have Canada net change in employment. No one cares. Also, we have an unemployment rate, again, for Canada. Yeah, it's usually not a global market mover. And then on the 10th, we have China consumer price index. So usually those numbers aren't major movers. Again, I'm looking for FOMC. I'm looking for NFP, anything that can be used to interpret potential inflation and all that kind of stuff. Okay, so that's the news. There's not anything major this week. All right, I don't see any Powell testifying. I only see the FOMC minutes, which is that's not a big deal. Okay, so anyway, yeah. So hello, TradingView. You guys can start putting your questions in there when you get a chance, so I can start answering them. I got Steen in there right now. Okay, cool. All right. So again, put your stock or your altcoin, make sure if it's an altcoin to put USD or USDT after the coin so that I get it right. And also, if you want to share what country or what city you're from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey, and it's why I look like this. All right, I said I got to come up with new jokes. I need new material. I know. I'm working on it. I got a lot of work to do. All right, so let's take a look here at Bitcoin. Now, if you read my report yesterday, I've been talking about these levels for a long time. There's a lot of confusion here. All right, first of all, here, let me just pull up my little square tool so I can point some things out. So this entire area, all right, as you see, it's defined by these horizontal lines that I have on this chart. Okay, they don't change. They're there. That's what's in play right now. That area right there is a consolidation. And I would consider that basically the short-term trend. Short-term meaning basically between 1 and 3 months. I mean, this goes back to like February. And we have a range low in place at around 32K. And we have a range high somewhere between 42 and 45K. Now, this is where things get confusing. People see the break, okay, of 45K, and they think that's meaningful. While it might be meaningful, you have to put the bigger picture context. You have to consider that these charts, especially Bitcoin, do not trade in isolation, okay? There are other factors that can affect something like this. Now, again, I can't trade on macro fundamentals, but what macro fundamentals can help me do is determine what type of strategy would be most appropriate for this environment, and more importantly, how to gauge my risk and what type of expectations I should have in terms of profit targets. You know, for example, is this recent move in Bitcoin, a lot of people are calling this a trend. In fact, I saw some nonsense report, because, you know, the fake gurus get really excited when something like this goes on. Nonsense report saying that Bitcoin is going to go to 100,000 this year. They're still putting stuff like that. Are you kidding me? Okay, so Bitcoin's not going to 100,000. Now, again, anything is possible. Okay, you always have to keep an open mind, but you also have to look at the macro environment. What is going to drive Bitcoin to 100,000? A bunch of retail traders? Who's going to drive this thing to 100,000 when the Federal Reserve is taking money out of the system? If you don't understand the role of the Federal Reserve and interest rates, you're going to have a hard time, especially over the next year. You're going to have a very hard time. People think that, you know, people that have been at this maybe a year or two, they've only seen an easy money, high stimulus market where hope basically is reinforced. It's a bad habit. It's not a skill. And people think that, oh, the market just pulls back and then it comes back. Yeah, when the Fed is behind you. But what happens when the Fed is no longer on your side? And that's what we have right now, okay? The Fed is expected to raise interest rates at least 50 basis points, at least. So that's aggressive. And the market's not really pricing that in yet. And what you need to understand about that pricing in situation is markets are irrational. And people will ask me, well, you know, the Fed raised here, but Bitcoin, you know, is doing this. Doesn't make sense because it's not a one-to-one relationship. All right. Same with the S&P and NASDAQ. Bitcoin is following the S&P, and the S&P is vulnerable. All right. So that's what you need to understand. The rising rates put pressure. It puts an invisible pressure on everything. And then somewhere along the line, some other catalyst comes along that no one was expecting. And then the market gets hammered because the pressure was there all along. It was just the irrational nature of the market was fighting that pressure temporarily. Okay, as long as that big picture Federal Reserve pressure is there, I have zero optimism in these markets, okay, especially highly speculative markets like Bitcoin and the garbage altcoins that follow it. So what does that mean in terms of this chart here and this consolidation? It means two simple things. We're in a consolidation. That's number one. So if we're in a consolidation and we're not in a trend, because unless you're a day trader, this does not count as a trend because the time frame that I'm evaluating, this is a range. Okay, this little section right here is a trend. Sure, if you're watching a 4-hour chart, a 30-minute chart, but that carries very little weight on the swing trade time frame. I'm only interested in swing trades, not day trades. So that means one thing. We are at a range high. Okay, this breakout was unimpressive. It gave it back pretty quickly. And as you can see right now, it's hesitating a bit, right? Which is not surprising to me, especially in light of where the S&P is and how the dollar is, where the dollar is. The dollar is likely to continue higher in a rising rate environment. All right. And things that trade against the dollar are going to feel pain. In fact, Bitcoin was originally created to fight inflation. Okay. That means dollar going lower, not dollar going higher. The dollar is still the world reserve currency. So as long as the dollar stays strong, Bitcoin's going to have a hard time. Okay, yeah, you may get some other country that has a problem, and then all their people have to buy Bitcoin, and it'll cause some kind of temporary gyration. But the Federal Reserve is pretty much a global market mover. We have the world reserve currency. So of course we're going to be a global market mover until someone else gets that status, right? So if we're in a range and we're at a range high, why would I want to buy up here? I don't want to buy. I'm not interested. All right. So I don't care what it does. There's a minor support at the 45K area, 42 to 45K, which is a previous resistance. We've talked about that. I've talked about that with my people. And the thing is, you see there's a little bounce off of it. Okay. But here's the thing. This is not a trend on this time frame. So that bounce doesn't really mean anything to me. All right. It doesn't really mean anything. This is minor. This little area right here is minor. If my charts can work properly here, this is minor right there. That's minor. So I have very little confidence that that support is going to hold. If you, like I said, if you're taking a small time frame trade, that's another story because you can grab a few hundred points, whatever. But again, you need to know what you're doing with that. You have to have a very solid plan for something like that. I can't help you with that. That's not what I'm here to talk about. But as far as swing trades go, all right, my level is very simple and very clear. It's here. All right, the 35K area, 35 to 33. I'll even be open to 35 to 38, somewhere in this range here. Like, what's this low over here? Like 38 area, like basically this entire range, this low part of the range, because that is the range low. That is where probability is likely to favor buying activity. Now, once I see the buying activity develop, which would be, where the setups occur, then I would be interested in taking risk in such an area. Now, here's the thing. People want predictions. They want me to lie to them. People love to be lied to in this game, okay? I'm not going to lie to you. I'm going to tell you what the chart says because the market doesn't lie. The market is honest, okay? And people don't want to accept what the market is, and people don't have the patience for the random nature of the market, all right? People say things like, well, I think this. The market doesn't care what you think. All right, the market's going to do whatever it wants to do for whatever reason. It doesn't matter. That's why you don't need to know the reason. All you need to know is the location. So I don't care what Bitcoin does in this area. I'm not shorting it. Is this a selling opportunity for potential shorts? Possibly. I don't short Bitcoin, so that's not a problem for me. I don't have to worry about that. But I'm only interested in longs. Now, again, people ask me, why don't you short it? Because I'm not going to use leverage. If I'm going to short something, there are plenty of other markets to short. I don't need to short Bitcoin. So here's the thing, looking for long, 35, basically we'll say 35 to 38K area, looking for long setups there. All right, that's the name, that's the title of this stream, Bitcoin price action analysis and setups now. That's the setup that I'm looking for now. All right, so people may think, oh no, we're looking for a setup right now. No, we're looking for a setup here. You have to prepare in the markets, not think, but prepare. All right, so if Bitcoin gets to that area, I'll be prepared with my plan. And I should be able to measure risk from the setup that price action provides and go from there. Again, it's a swing trade. Now, keep in mind, let's talk about the macro fundamentals again. Because this market, the general environment is not supportive for these types of instruments, there's a chance, there's a decent chance, I mean, I can't put an exact number on it, but there's a decent chance that the 32 area or whatever, that 35K support, it's possible that it breaks. Okay, and if it breaks, we're going to see 25K most likely. Let's just take a look at a weekly chart real quick. Look at this. Look at this. Does that look impressive to you? It does not look impressive to me at all. This is not a trend. This is just nonsense. Okay, this is most likely we're in a broad wave 4, and inside of a wave 4, we can have all kinds of random gyrations and all kinds of random nonsense. In fact, what do I see here? I see a potential 3-legged structure after a 5-legged structure. So 5, 3. This could be a B wave inside of here if you want to put wave counts on it. And then we could get another 5 wave C. It's possible, a bearish C wave. It's possible, okay? Don't know if that's what's going to take place, but the environment favors that scenario. That's all I need to know. All right, so how is that going to help me? Can I place trades on that exact information? No. But what I can do is I'll know that longs, I should be extremely selective with them. And if I do manage to find a long setup, I should be prepared to take my money quickly, meaning I shouldn't be expecting to get a 3-to-1 reward risk. If I can get 1-to-1 or maybe better than that, slightly better, I should be happy with that, okay? Because that's what the market's going to be limited on the long side. This is not going to be like, oh, I just bought the market and it's just we're going to have one of those magical rallies, not in Bitcoin. All right, now there are some things people are mentioning here that are doing their own thing, right? Like Luna, waves. I'm going to talk about those in a moment because you're always going to have your exceptions that are being driven by some nonsensical hype. But we all know where that goes. All right, but anyway, all right, so that's my Bitcoin analysis. Let's see, how long have I been at it? All right, about 10 minutes. I'm going to cut it off there. So if you have any questions about the Bitcoin situation, let me know. Otherwise, I'm now going to go through the chats and start answering your questions. TradingView people, now would be a good time to start asking your questions in the chat. Okay, so let's begin here. So Dan asks me, how are things? Busy. Okay, going through this migration situation with the other server, and it's extremely time consuming. So that's where my focus has been, but it's an important thing. I have to get that done. Peter, can you look at Ethereum, please? I took a trade. So see, okay, Ethereum. Now, again, Ethereum we know is a Bitcoin follower, right? So everything that I just said about Bitcoin is going to apply to Ethereum. That's the first thing you need to realize that, right? So let's take a look at the Ethereum chart and see if there are any other pieces of information that it can give us as far as levels or anything else. Now look, so Ethereum, it doesn't look exactly like Bitcoin. Looks like a pretty aggressive rally, right? The chart pattern is not exactly the same. But here's what you need to understand. This, first of all, you have that's a nice wave structure in there. And people are going to think like, oh yeah, this thing's in a bullish trend. You're at resistance right here. There's your resistance, okay? Old support, new resistance, and this thing is a Bitcoin follower. So even though we have an interesting pattern here, it doesn't really mean much. This entire zone is still a consolidation, just like Bitcoin, and we're at the range high. In fact, gold recently has done something like this when gold tested 2075 again, or whatever, almost 2100 in that geopolitical spike, because all kinds of nonsense was going nuts during that geopolitical situation, and it pulled right back. Why? Gold is in a wave 4 and it's still stuck in there. Okay, so that you can get a fake out very similar in something like this. If you're long Ethereum, I mean, you know, I know Andrew called a trade in that, and I don't know, I forget where the levels are. But usually in this environment, I mean, he's pretty much, we don't call trades the same way, by the way. Okay, people ask me like, oh, how come he called this and you don't call it? Because he has his own style. I don't tell the guy what to do. He has his own style. He does things the way he sees them, and I do things the way I see them. Okay, and we're not the same at all. He's much more open to taking types of trades that I'm not. Now, it doesn't mean that it's wrong. It's just he's aggressive in those areas. Now, as far as Bitcoin, I mean, as far as Ethereum goes, here's just some things to keep in mind. Whenever you can count 5 waves, and this is how I like to use Elliott wave, right? There's a lot of confusion. Elliott wave is very vague. It can be very complex. There's no reason for you to make it complex, right? Keep it simple. Really, when you're using Elliott wave, you should only be looking for 4 wave structures that fit the Elliott wave rules, or 5 waves complete, which means a corrective wave is likely to come, right? So can we count 5 waves in this little mini structure here? 1, 2, this fits 3, this is a 4, and this is a 5 extension. Okay, we can look at that. Or we can even count this entire giant leg as a wave 3, 4, and 5. I mean, there's 5 waves there. Okay, so buying up here is a really bad idea. It's a very risky idea. It's a good place to take profits if you have some. A corrective wave is likely to follow. It doesn't mean that it will. It just means that the structure favors that. Okay. Now, when Elliott wave gets confusing, what do I tell people to do? Resort back to your levels and your structure. right? And skip the wave count. If the wave count, I'm not sure if it's this, if it's that, if it's not crystal clear, don't use it. Resort back to your levels and your wave and your trend structure. Okay. So anyway, that puts Ethereum in a range, even though it looks like it's broken out and people are going to say this is a new trend and blah, blah, blah. Right. Not in the eyes of Bitcoin. It's not. So don't be fooled by this. These markets don't trade in isolation. I have to repeat that. All right. So that's Ethereum. I hope that answers your question. All right. Okay. New Smyrna Beach. I think I pronounced that right this time. Elizabeth. Okay. Looking okay, no problem. Elizabeth, I know I was supposed to send you an email. I have like a problem with people joining the server, so I need some help from you on that. But I want you to come into the server, so I'm going to send you an email. I should have some time this week. It's just I have so much stuff on my plate. It's hard for me to keep up with everything. Winter, okay, cool. Mr. Plow. All right, let me jump over to the other chat here. Let me see whatever. I got some questions here. Because there's Stian from Belgium. It's good to see you, Stian, again. Could you have a look at ALF? Okay, Alphen. Let's take a look. I think you've asked about that one before. Alphen. It's a stock. It's a stock on Euronext. Okay, let's take a look. So what do we have here? It's an interesting structure, right? I don't know what they do, but let's take a look at the weekly chart. It's the first thing you should look at because you want to know where you are. If you're not familiar with the stock, you need to know where you are in the bigger picture. And clearly, this is generally a bullish trend, right? It's made higher highs and higher lows. Recent, we could say the midterm trend, which goes back maybe 6 months or more, we could say is range bound, right? You have the bottom of the range here in this area. We have the top of the range here. So where is price right now? Is it nearer the bottom of the range or the top of the range? It's nearer the top. That's pretty clear, right? So what does that tell us? That tells us we shouldn't be buying, that's for sure. If you're long, great place to take money off the table. Look where you are. You're getting into that range high area. Risky area for new longs. I mean, I don't care how great they're doing. I don't care what the news is. All I know is it's a range high. In a general financial environment that's that's vulnerable right now. I know this is not an S&P stock, but when the S&P gets really hammered, the world is affected by it, right? So you have to keep that in mind. Even when I look at a non-US stock, I still keep the S&P in mind because when the S&P feels the pain, usually the whole world, I'm talking about extreme pain, right? So that's why you're in such an area where that type of price action, you're vulnerable for it. So wouldn't be looking for longs there, at least not for swing trades. So let's go to the daily chart. Okay. Now, so again, on your daily chart, man, my mouse isn't working right here. So on the daily chart, let me open this up a bit. Right, it's clearly the more recent, the short-term trend is bullish, higher lows and higher highs. You have this potential double top developing there. The most recent price action, as you can see, is bullish, right? And that's trying to give you another little mini higher low. Nice bullish pin bar close in there. I don't know if it's closed yet, but maybe it is. But that's a bullish setup right there. So if you're interested in like this would be great for like a day trade. Like I would anticipate higher prices just for tomorrow, maybe the next day, something like that. If you're interested in the swing trade, the question is, what's the risk, right? The structure is generally supportive, but you have to keep in mind where we are in that bigger picture. Like I just said, longs are a bad idea, but there's a long setup here. All right. So that means the long setup is going to carry more risk because you're in an area that's not exactly the most favorable. What's the low of this pin bar? 89.76. The current price is 92.64. So you're looking at what, 3 points, maybe 3.5, possibly 4 points of risk if you take something like that. And that means you need to make that, right? And you're near the $100 whole number area. So that $100 point may be a good place to consider taking your one-to-one risk or slightly better than one-to-one if it can get there. Just keep in mind, I would consider this an aggressive trade if you take something like that because of the general location, okay? Compared to like, if you were at like, perhaps if you were here at the old resistance retesting it, I mean, I would probably give you a similar talk, except you would have a reference point of up here, right? This previous high. Right now, you don't really have that until you go to the range highs, okay? So just keep that in mind. But you have a minor support at 89. Your next support is right here at 84, basically 84 area. Does that make sense? Okay, so that's Alphen. Thank you for asking me about Alphen. Let's see what else we got here. All right, I'll hear all my TradingView people. Okay, from Chicago. Cool. You're okay. It must be just you, Golden, because I don't see any other complaints, or maybe I have other complaints. Let's see. No, I don't see other complaints. So you might want to refresh your browser or something. Okay. Uh, Getting the robot voice too. Okay, that must be TradingView. Okay, yeah, that's not me because I don't see one complaint on my other channel here. All right. Yeah, you guys need to whenever you see problems like that, like this, the screen is acting funny or something's not acting right, just the first thing you do, refresh your browser. Okay. All right. Anyway, thanks for letting us know. All right, let's see here. Hey, from DK. Okay, cool. Good to see you. SRUUF. All right, uranium. Oh, here we go with the uranium bounce coming for the euro. All right, let's take a look. Robot in white in white. Oh, okay. Yeah, I'm not sure what's going on here. Maybe it's my internet connection. That's always possible. All right, so SRUUF. Let's take a look. Oh, interesting. Physical uranium. All right, uranium stocks. Bill, you might be interested in this one. Bill's like one of these, he finds these weird stocks. All right, so here's the thing. Interesting breakout, right? But here's what you have to realize. Even though I'm not into I don't care why these things break out, this is most likely geopolitical. All right. And not only that, so you have to keep that in mind. What is going to continue to drive this thing if that was geopolitical? Once the geopolitical thing cools off, because at some point it's going to likely cool off. I don't care what the news says, right? It's generally a temporary thing. Where's this thing going to go, right? You are at this range high, not a good place for new longs, right? As Seinfeld would say, why would I get long? So no longs here, all right? If anything, potential aggressive short, you can use options for something like that. I'm not going to talk about options because I will confuse everyone, but you have a potential failed high. Look at this. Not only do you have that larger double top, that larger range double top, as you can see, dating back, quite a few months, more than 6 months, but you have a more recent double top as well, potentially developing. So if anything, it's stay out or take profit, aggressive short, or you're waiting for a long. But if you're waiting for a long, you need to find like a decent support level, and you're looking at like over here. Okay, you're looking at like this area right here, which is what, $12.54. So basically $12.50 area. This thing's at $15. So you're looking at a potential $3 pullback. Again, keep in mind that if this was a geopolitical catalyst, then the first level of supports are likely to just get cleared because there's nothing driving this except, basically some irrational perception of things. All right, does that make sense? Okay, because again, people like to apply logic, and logic is a bad idea in an arena that's random. So just that's what I'd say about that. But interesting stock. Thank you for bringing it up. Okay, let me pop over here to the other chat, and let's see what else I got here. All right, so just going back. If I miss your question, please just ask again, because sometimes when I'm going through this chat, people say hi and I don't see it until as I'm closing up the stream. All right, so let's take a look. Hi, everyone. All right, from Mr. Plow. Okay, Luna doing its own thing. So I mentioned this a little bit earlier, Luna. All right, look at this. Luna has been out of control. Waves has also been out of control. I'm just going to put up that. Look at Wave. Ooh, look at that. This is a new piece of information for me. Look at that. All right, we'll get to that in a second. But someone had mentioned Waves in a previous stream, and I'm like, Waves. I don't really follow Waves. And then I was looking at that chart, and I'm going to show you something that I saw. In fact, I was going to write a TradingView article about it, but I just don't have the time. And of course, after the fact, I could say I would have been right, but it doesn't matter, right? Because I never wrote the article. But so here's the thing, right? Something like Luna, it broke out of this resistance. Notice how it retested. Again, something like this. This is where day trade opportunities can come into play. Something like this, which we saw a similar situation with Bitcoin, right? It tested a previous resistance, minor. It's in a range though. So why the day trade? Because the day trade reduces the exposure from the bigger picture risk, of course, if you follow your rules, right? A day trade stop is going to be a lot tighter then a swing trade stop. Now, people can say, well, where do I put that? Well, I can't tell you that. That's all strategy stuff on your side. But the point is, a day trade, the whole point of a day trade is the smaller amount of proportional risk, right? But I don't encourage people to day trade, especially if you're new, because there are a lot of other problems that you have to deal with. And if you just don't have the experience, you're not going to get anywhere. I'll tell you right now, you're just playing a giant slot machine. And people don't want to hear that. People don't want to hear my talk of game of skill and game of chance. People say, oh, just show me how to make money. I don't care about game of skill. If it's a game of chance, you can't make money. Okay, you can make money randomly, like a slot machine, but you can't make money consistently in a game of chance. So when I keep telling people that, I'm telling you that for a reason. I'm not telling you that because I think I'm cool. All right, now, so the situation here with Luna, you have the higher low, you have the higher high. It's trying to go higher. As you know, I would never buy something like that. Okay. Do you sell something like this? If you're in from a good price and you want to take profits, sure. Where's the top going to be? Who knows? There's no way to know. You can do an extension, right? You can do like a proportional extension. I'm not going to do it here. And you could measure from here. You can measure from here, right? And you would project from this low over here, and that will give you some proportional reference points to go by. Fibs and support and resistance levels are points of reference. They're not, there's no precision to them, and there's no particular advantage to using them. If you don't have a statistical advantage, a measurable statistical advantage in this game, then you're looking at 50%, okay? You're looking at a win rate of like maybe 50%, and most likely, theoretically, less, because there's a cost involved, right? So you have to keep that in mind. Now, so what to do with this? Well, Luna is a good one, I think, for the bullish radar. Again, it's an altcoin, and it's doing its own thing. So when the hype machine runs out, I would be looking for the first supports if you're looking to do anything with this thing, right? And this is going to be your support zone right in here. That's where you should be. That's where, like, if you're making any plans or preparing for anything, that's the area you should consider. All right, not anything sooner, because this is really tight up here. And this thing, again, if Bitcoin has a serious pullback, you think this thing's going to continue? It's acting relatively strong, yes, but we're at highs. All right, again, back to that weekly chart. I mean, look at this thing. Look at this thing. Look at this now. And again, okay, this is good that I bring this up now, because I was going to mention this about waves. What do you guys see here, my Elliott wave people? What do you see here? One. This is a wave 2 over here, right? That wave 2 bottom. This is a wave 3, very clearly, wave 3 top, right? Then we followed by what? Wave 4, right there, clearly. And what do we have here? Wave 5. What do I say about Elliott wave? You're looking for 4 wave structures or 5 wave structures. This is 5 waves. Now, within this structure, we have a little mini 1, 2. We can say this is possibly a 3 and 4 in here. It's just not super clear. And a 5 of a 5. You got to be nuts buying this thing, okay, after such a move, because this is going to probably turn into what waves looks like. All right. That's just the nature of the herd mentality. It doesn't matter what the fundamentals are. It doesn't matter what the hype is and all the other nonsense that people like to get overcomplicated with. It doesn't matter. What matters is where the emotion or the irrational whatever runs out, or the perception changes, or the market gets imbalanced, extremely imbalanced on one side, meaning it's overbought. Okay, and people, oh, I could use the RSI, and that'll tell me when it's overbought. No, it's not going to tell you when it's overbought. It'll tell you relative to irrelevant information. It'll give you some kind of overbought, but it's irrelevant. It's a complete waste of time. All right. Anyway, so what does that mean? Buying up here is generally a bad idea. Investing up here is a really bad idea. Wait for supports, okay? If you want an aggressive swing trade, be patient. You're looking at a low of 77 area, maybe $80. Maybe you get a test of $80. If it breaks that support, you're looking at $50 again. All right, that's not out of reason. Does that make sense? Especially with 5 waves in your face, like we just saw. Does that make sense? So I hope that gives you some perspective on Luna. All right, Leggett and Platt. Okay, here we go. So we got one of Bill always comes up with these weird stocks that I just never heard of. But that's cool. That's what we need. We need variety like that. Okay, instead of looking at all the same ones that everyone looks at all the time. So Legg and Platt. Let's see, what is this? This is a weekly chart. Now, this is an interesting chart. Clearly, it's not on its highs, right? Nice pullback. The broader structure dating back to, what is this, a year ago? That was bullish, okay? And since then, it's pulled back. So we could say midterm is bearish, right? That's your midterm. Short term, which is going to be the recent couple of months, is also basically somewhat bearish, perhaps range bound, we can argue, right? So let's take a look now at the daily chart. Here's the thing. This is a decent area. I mean, this is basically a 50% pullback off the high, and it's trying to establish a double bottom. So you have an interesting location for sure. You have a support. Now let's take a look at the more recent price action here, and let's see what we can say about that. So, I mean, obviously, look, I see sporadic candles, and how much is this thing? This thing is $36. So your bottom is right there, right? That's where it basically double bottomed in that area. That's 34.78. So basically 35. There's a pin bar, a bullish pin bar in place. It's also an inside bar, and there's a buy signal in it. Okay, based on the the steps that we follow. And this is a buy signal, Bill. That's definitely a buy signal. The risk would be defined at 34.78. So you figure 34.50, right? You want to round that, perhaps even 34 to give it some room. And but the thing is, Bill, the actual signal was at 35.5. So you're about 50 cents higher. Okay, so 35.5 is really where the risk has to be measured from initially, right? So what is that? 35. So it's not like a huge mover, 50 cents. So you figure $1.50 of risk, something like that, which makes it within reason to buy here. But the thing is, you need to make $1.50 at minimum, right? 37.50 is the high, is this little mini range high. That is not bad reward risk. Okay, you can get 1-to-1 from that, I think. So at minimum 1-to-1. So it's not a bad idea. Again, I don't know what they do, so I'm not sure like where their correlation would be with the S&P. Let me just look at the S&P real quick, because whenever you look at stocks, you should look at the S&P. Okay, so look, the S&P is trying to be strong, right? Look at this real quick. Now, this is a daily chart. I'm just bringing this up because whenever you look at a stock, you should look at this. There's a buy signal in the S&P as well. But the thing is, what did we close at? 45.75, and the high is 45.80. Is this thing going to make a higher high? You have a higher low, but can we count on this trend? I don't think so, right? And the reason why I say we can't count on it is, look at this. That's the dollar index. You see that? Does that look bearish to you? Not to me. How about the bond market real quick? No one's asking me about these, but you should always look at these. Does this look bullish to you? This is the 10-year note futures, okay? Lower high likely to lead to lower low. What do you think that's going to do to the dollar, right? This is rising rates. The lower it goes, rates are inverse, okay? So if dollar is going higher, I don't know where S&P thinks it's going, right? It's just nonsense. So very vulnerable S&P, which means you have to keep that in mind when you're buying stocks. So you have that situation with leg, that's a potential long right there. Just keep in mind the environment that you're buying it in. So how can that be helpful? If you take a position, because the setup is there, the level is there, right? You have all those things lined up. If that position gives you a hard time pretty quickly, meaning you buy it and it's red, you should be more sensitive as far as maybe getting out early, taking that loss earlier, right? Perhaps not taking it to its full stop, because the market's, the general environment's not supportive. I don't want to discourage people from, not taking trades, but you need to know where to be sensitive, and you need to know where to, like I said, understand how the environment should shape your expectations. Some people are just going to be buying these pullbacks thinking, oh yeah, the market's back to normal. No, okay, we don't have any Federal Reserve backing us up anymore. Okay, so good question. Let me jump over to the chat. Again, I appreciate everyone's questions. Again, I'm not going to do 2 hours today. I made my promise. All right, so let me see here. Now, someone just mentioned here, where was that? Euro. Hold on. My chat isn't working right here. Okay, let me see here. Okay, so a bounce coming for the euro. All right, well, here's the thing about the euro. everything that I just said about the dollar, you got to be nuts. Okay, thinking a bounce, the euro is going to get hammered. With that dollar about to break out, take a look at the pound. Oh wow, the pound is looks pretty decent considering, but you're bouncing the euro not as a swing trade, maybe as a day trade, but there's nothing there, right? You're at a potential support, but this is a failed high, and you're likely to start pushing lows. This entire structure right here is a lower high. Okay, this entire structure is a lower high relative to this structure. That is not bullish. Okay, and in light of the dollar and interest rates, I don't see the dollar, I don't see the euro going higher anytime soon. So I would not really be putting any weight on long signals, be looking for shorts. Okay, that's something I would short. Not now, I missed that one, but I'm short the pound actually. My people know about that. It's been a pain, right? That pound was like 10 pips away from my target and then it turned around. What are you going to do? I'm still in it. But anyway, yeah, I would be short anything that's against the dollar or long the dollar for now. All right, so thanks for asking. That was a good question. Let's move along here. Oh, look, freeloader, DWAC. Yeah, right. We know that one. Now that one is a pure hype play. Okay, we all know this. This is all hype. So you can't go by for fundamentals. Forget it. This is all going to be like perception and sentiment and irrational nonsense and any other drama that comes from this. Right? A lot of drama surrounds this. So what do you do with this? Just look for your support levels. I mean, you have a lower high in place right now. This is technically not a good sign, right? That's a lower high. In fact, you can argue that this entire structure here is a head and shoulders structure. But I'm not going to put a lot of weight on that because, again, this thing is driven purely by hype. So if there's any news that they're going to change this or someone's going to do that or they're going to come out with this software sooner or they have this CEO, whatever nonsense they come out with, right? That's how that game works. You need to be positioned in advance. You can't react to news. News just drives things to where it was going to go anyway faster. So look for your support levels. You're at one right now. I wouldn't touch this thing right now. Look for maybe a more extreme support because you have a lower high in place. Does this thing make the lower low, right? That's the question that only the market can answer. 3681 is the low. So again, I say that a lot. Let the market figure it out. People say, well, I thought this, and then the market is not doing it. Don't think. You cannot think, all right? Because that implies that you have control, all right? And that information that you're interpreting is meaningful, right? The market does not care. So the market leads. We must be followers, okay? We follow. That is what we do. The market speaks. We listen. We don't think. We listen. The market says, I'm going here. I say, okay, no problem. Let me see what levels we have there. And then I can prepare and adjust. All right. And I see if I see a level, oh, okay, market, you want to pull back to a support and a bullish trend. Okay, cool. I was prepared for that support. Oh, you're showing me about a bullish setup. Oh, I could measure risk now. Okay, I'm willing to take risk here, Mr. Market. Thank you. All right. But that's how it has to be. And the rules help you avoid over all that reacting type of behavior. Reacting is for the herd. All right. It's so funny. I see that there's a commercial for a broker. I probably shouldn't mention their name because, you know, house rules and stuff, they'll ban me. But it's this ridiculous commercial where they show this crowd of people welcoming the new trader. And they say, wisdom of the crowds, you're going to benefit. Oh, who put this together? You have to think about, you know, I mean, the marketing agency or whatever who put that together, right? They're just trying to appeal to, they're trying to figure out what the retail trader wants to hear, and they're trying to put a message together that's going to be appealing so that you open an account, right, at a particular broker and blah, blah, blah. Meanwhile, it's complete opposite, okay? Any public forum, there is no positive thing about wisdom of the crowds. The crowd is always wrong. So the only value you can get from that is by being a contrarian and thinking the opposite, not necessarily doing the opposite all the time, because if the crowd is all bullish, what does that mean? The market may be going higher, right? You don't want to just step in front of that, but it means that you probably shouldn't be buying either, right? At least not on the bigger picture. If everyone is bullish, we see there's some, those are times of like extreme sentiment. That's what you're looking for, okay? When everyone is saying the same things and over exaggerating these expectations. We saw this with the altcoins back in November and December, right? All these ridiculous titles on YouTube, one after another. Early investors are going to make billions, right? And then they have this stupid face on the thumbnail like that. that was a sign. I saw that. I'm like, man, this is not a good time to be buying altcoins. If that's what if that's what the expectations are, and that's what they're telling people, because that's what people want to hear. Use the fake gurus to your advantage. Consider them an amplifier of the herd mentality, and consider the opposite of whatever they're saying, because they're clueless. Okay, no one knows anything. No one. I don't know anything. I don't claim to know anything. I just know how to control my own, you know, behavior. Okay, and I know to look for certain things from a market, and I keep it as simple as possible. I don't know anything, right? The market knows everything. So anyway, that's my rant. Can you take a look at? Okay, sure. My average price is 11.85. All right, Alex, let's take a look. All right, so I hope I answered your question about DWAC. Again, just look for levels on that, but the structure is not favorable for longs. I'll just let you know that. But that doesn't mean, you know, some news can come out of nowhere and next thing you know, it's back to $100. It's irrational like that, and a chart is not going to help you see that. All right, so Palantir. This is an interesting chart. First, weekly chart. Now you're in from 11.85. Okay, it's a good price. Now look, it's trying to turn around considering what's going on here. Okay, but as far as trend and structure, you know, you have this bearish structure on your midterm trend, right? Lower highs, lower lows. It's trying to bounce here, but that's potentially a wave 4, right? If you want to use Elliott wave, and you have an old resistance, an old support, new resistance right there. Ideal spot for wave 4 to turn around, right? So if you're long, there's no reason to sell at the moment. There's no sell signal. At this point, if that was my position, I would let that run. Look at the nice higher low that you have. Look at today's price action. Beautiful, right? Let it run. Now, again, look at that coming resistance, which again is right around here, right? No, keep that resistance, keep that point of reference in mind, 17.84, basically $18. So you have some room to play with there as far as profit targets, right? I don't know how you define your risk on that. I don't know where your stop is. You don't have to tell me. But the thing is this area right here, you want to be watching for sell signals. If you have a nice profit now, again, it doesn't hurt to take a little off the table in this situation, just to, you know, just for a good, best practices. I mean, how much is a little off? 10% of your position, 15%, just to take something off at highs, because that's generally a good idea, right? When something looks so nice like this, and then you let some run. If it wants to continue to pay you, you let it pay. A common mistake with this is people are always trying to squeeze out every penny. So I'm going to hold it to the top. Well, guess what? The top is random. So you're not going to hold it to the top. And if you do, it's like playing a slot machine. Okay. So at this point, the market says it wants to run, let it run until a sell signal shows up. That would be a good time to perhaps raise your stop, reduce your exposure some more as it works its way into the $18 area. Okay, it may turn sooner, it may work its way up there. Keep in mind, the S&P had a nice day today. This one is definitely an S&P correlated stock. So when that S&P turns around and it's in an area, you know, it's in a vulnerable area, this thing is likely to get hammered. Okay, just keep that in mind. This is it's a tech stock, and tech stocks generally don't do well in a rising rate environment. So all I'm saying is don't get too over exaggerated in your expectations. Does that make sense? But as long as the market wants to pay, you let it pay. I hope that all makes sense. All right, thanks for asking. All right, let me move along here. Okay, there was problems before. Okay, you know what? Thanks for letting me know. I can't see those problems. Like, I'm not getting any reports. So, okay, Denmark. Oh, okay, cool. Nice to see you got some of my Denmark people here. All right, Tesla. All right, let's take a look. Tesla. All right, let's take a look. By the way, if I miss your symbol, I apologize. Again, I do this every Monday, so you can come back next Monday if I miss your request, and you can ask me again. Just letting you know now, because I'm not going to be able to answer everyone's questions. I'm not going to be here 2 hours today. So look at this move, right? This is a market mover, and it's definitely correlated to the S&P. I believe this is an S&P component. So higher low, all right. Interesting to know. There's a nice wave structure in here. I've been talking about Elliott wave a little bit more. Why? The structures are clear. This is a 3. You have this little 4 situation right there. Possible 5. possible 5 inside of a range resistance area. Okay. So the midterm trend on this thing is not bullish. The long-term trend is, but the midterm is not. It's range bound, and you're right at the top of the range. So if you're long Tesla from a good price, this would be a great time to be taking some money off the table. There's no sell signal there. Okay. So there's no reason to be in a hurry to get out of this thing, but this is a bad place for new longs, right? A lot of people on the Robinhood accounts, you get these mindless herd mentality people that they just follow, I say a lot of conflicting things, like we need to be followers, okay? But then I say something like, oh, you got these mindless Robinhood people that follow whatever that's given to them. Well, it depends on what you follow, right? When I say follow, I'm talking about following one thing, and that's price, nothing else. The market speaks, right? But herd mentality people follow things that everyone else follows, like news, or useless oscillators, or useless moving averages, or useless fake gurus that provide no value and have no clue what they're doing themselves. Okay, there's no advantage. They have a perspective that lacks a lot of substance, and because you may be new, you don't recognize that. I can tell it in less than a minute. I can tell you if someone's a fake by what they're saying. Anyway, so as far as Tesla goes, yeah, bad place for new longs. Good place if you're long, and let it run until it turns. So in this area, you should be prepared for selling activity if it develops there. Now, again, in light of where the S&P is, that makes a lot of sense. Okay. Again, when you're dealing with a stock, especially a stock like this, always take a look at your S&P. Say, well, what's the S&P doing, right? And the S&P, again, is fooling around in an area that is likely to find selling. This is actually a very random area, right? If you want to look at it from that low to that high, if you want to consider it, you're fooling around the midpoint of that area. It's highly random in an environment that doesn't support it, meaning the Federal Reserve is not behind this. They're not printing money. The dollar is going higher. It's not going lower. That's going to take a bite out of the S&P. You think I want to buy the S&P near resistance levels? No. Okay, this is a bad time to be investing in stocks. All right, unless you're talking about value stocks that pay you to hold them, then there's some reasons. But growth stocks, tech stocks, bad time for investing. All right, people don't realize that yet. Okay, hey, Savvy from Brooklyn. Hey, Savvy, I haven't seen Savvy in a long time. How you doing? Long time no see. Savvy from Brooklyn. He probably doesn't talk like that, but that's, people from Brooklyn used to talk like that at one time. All right, now it's people from New Jersey. Actually, no, people from New Jersey don't talk like that either. At one time they used to, a long time ago. I still talk like that though. So here's Litecoin. Okay, Savvy's asking about Litecoin. So again, as we know, Litecoin is a follower, right? It's a Bitcoin follower. Look at the situation right here. So this range on Litecoin is even more well defined than Bitcoin. Look at this range. It never even broke that range high resistance. Like Bitcoin broke 45K and got everyone excited. Litecoin couldn't even do that. That's relative weakness. Not only that, we have a lower high in play right now. So no reason to be long this thing, all right? If you're long, that's a reason to take a loss, or tighten your stop, or I don't know what to tell you if you're long, but that's a lower high, and there's a sell signal in this thing. For people that like to short these things, is that a sell signal to go short? It actually is, right? You took out this previous candle low, the green candle. That is 128.77. This thing's at 123.32. So there is a sell signal. Your risk would be defined by this area up in here. And then you basically have to hope for the best, right? You have to bet whatever you risked. Hopefully you can make that back, and I'd be looking for this midpoint area for potential profit targets. Again, I don't short these markets. Bitcoin, Litecoin, I don't touch those. If I'm going to short something, it's the S&P, it's Forex, stuff like that. Okay, so anyway, that's what you have here. If you're looking for longs on something like Litecoin, again, you need to wait for the range lows. That's just the best thing to do here in this situation because you're not in a trend. So if it tests the range lows or supports, that's where there will be swing trade potential setups in those areas. Also, day trade, look, you could day trade anywhere. Again, I'm not going to talk about the complexities of day trades, but you can do that pretty much anywhere. You have to understand your environment and you have to understand your smaller time frame levels. But bigger picture, looking for that range low. And again, keep in mind, Litecoin is acting relatively weak. If there's any dramatic break in Bitcoin, this thing is very likely to break based on that information. Does that make sense? Okay, cool. So, all right, let me move along here. That was Litecoin. Greetings from Ontario. Okay, cool. Welcome. All right. Hey, John, good to see you. Todd. Okay. I got the robot voice as well. Robot voice. Okay. Yeah. So, all right. I'm seeing all the complaints here now on my other channel about the technical problem. All right. So again, people, if I'm doing a stream and there's like problems with just refresh the browser. Okay. I've seen. Okay. Here's a question from Alex. I've seen that Kathy Wood bought some path. It has reached some great prices. Can you take a look? Their CEO said, okay, here's the thing, Kathy Wood. I'm not saying she's, I'm not going to call her a fake or anything like that. She's not, but she's a mainstream investor or fund manager or whatever you want to call her, right? She manages the ETFs. She just happened to buy in at a good time when things worked out really well. Don't put a lot of weight into what she does, especially if you're thinking more short term, because someone like her, realize it's not her money at risk. Okay, so she can, I'm gonna buy 10 billion shares of this stock here, and in the future they're gonna be something special, right? She can take that risk. Okay, you probably can't. So don't put a lot of weight into what she does. Perhaps she can give you an idea, right? Perhaps something for the radar. But look at this thing, right? Okay, so she's buying into this thing. At least she's not buying the high. All right, I'll give her that. This thing's making lower lows. So right now, at this point, all trends, right? Long-term, mid-term, short-term, they're all bearish. So, I mean, if you're thinking, I don't know what they do, but, and look at this recent gap, right? That's probably some kind of news on the stock itself. Again, there's no structural support here. So if you're going to play the inventory game, obviously that's what she plays. If you're going to play the inventory game, then small bites, but there's no reason for this thing. There's no technical reason. This thing is not communicating anything that says it wants to go higher. You have this little inside bar off of a potential failed low, but the trend is completely against you. And you have this gap that, this gap is definitely a bearish sign, because that can act as a resistance and continue this momentum. So, certainly don't want to be shorting the lows. Perhaps, if you want to be aggressive or accumulate some inventory, okay, fine, you could take your small bite. Otherwise, look for a structural change. Wait for a structural change. It could take weeks. Keep in mind, again, you're dealing with a stock, and the stock market is not exactly in a position to do well in the shorter time frames. Now, keep in mind, I'm very pessimistic on that stuff, but things can change, okay? The reason why I'm pessimistic is because of where the Fed is going with this. The Fed can change their mind. And if they do, then it's going to change everything. But right now, okay, the bonds are telling me that story. The dollar's been telling me that story. I've been following that since August. No one was paying attention to it, and especially in the mainstream news. No one could be bothered with bonds. Bonds are boring. Okay, but I saw the change way back then. The bonds started pricing in the rising rates. So until that changes, these stocks are going to have a hard time. All right, so just something to keep in mind. Again, if you want to follow along with her, take a small bite, take something that's not going to hurt you. If this thing, what is this thing at $22? So if it goes to $10, you have to be okay with that. Okay. Anyway, thanks for mentioning Kathy Wood. All right, let me see here. What else do I got? Mind. Thanks for your stream. Okay, I want to ask the question that solicits a bit more of, okay, how important is volume? Coupled with candlestick form when trying to pinpoint reversal prices. I can give some examples for Bitcoin, but examples in a 4-hour chart, no good. 13 and okay. Is this reliable method? Okay, good question. All right, so let me read that question for the people that can't see it. I can give some examples for Bitcoin. For example, on 4-hour chart on February 10th at 1300 or March 2nd. Is this a reliable method for reversals, and are these tradable? Volume, no. Okay, that's why there are no volume histograms on my charts. It's not. It's coincidental. Okay, I rely on the candlesticks and the levels and the general structure, and I get the context from that, and I measure everything from the candles. Now, again, candles are not perfect, they're random also, but it's the location that I'm most interested in. A volume, I've spent a lot of time trying to figure out, like, is there a particular pattern to look for? It's absolute. You're just playing a slot machine. There's no rhyme or reason to it. So don't waste your time. Okay. Volume is not helpful, especially on smaller time frames. Okay. Keep in mind, when you're dealing with something like volume, okay, like especially with something like Bitcoin, because you don't know what the real volume is, right? The exchange, whatever exchange you're watching, is reporting some general idea of what the volume is, but the volume that's transacted now or just after now is old. All right, and it's useless. What we need to know is the potential volume of the future, which you cannot see, because the market maker or the exchange is not going to show you their order book, their real order book, not the nonsense that they show you on Binance or on Coinbase Pro. Oh, look, the order book, I can see the order book. That's just to stimulate trades. Okay, understand the industry is here for one reason, and that's to get rich off of you. And stimulating trades is part of that process. They don't care if you make money or not. It doesn't affect their outcome. What affects their outcome is if you trade. So they're going to put all this stuff in front of you, like a slot machine. All right. And they want you to trade for all kinds of random reasons because they collect fees. So keep that in mind. Volume is useless. And smaller time frames, again, you need to see where the orders are. I'm talking about real limit orders, and you need to see who they belong to, because you need to see if that's one guy with $1 million for sale, but spread out all over the place. Okay, or if it's like, you need to see that. That's very important information. Of course, the exchange can see it. It's on their book, but you can't. So you don't see the future. All right, you can't see. And if that's a large player, like for example, if it's Elon Musk, we know if you knew where his account was and you knew the orders he was placing, don't you think you would probably pay attention to those areas? Because most likely he knows something, because he can afford to know something. We don't know anything. Retail traders can't afford real inside information. He can move a market if he wants to. Okay, so that's why that's where volume has value. At one time, someone asked me about like the Wyckoff method, which I know is sensitive to volume. You have to understand where that stuff comes from. 100 years ago, people used to speculate in the stock market with ticker tape, right? The ticker tape would show you a volume number. That was true volume, because it came right from the exchange. So it probably was more accurate. Today, we can't see what's really going on. So yeah, don't even bother. That was a good question. Let me see what else we got here. I'm just trying to get through this chat. Man, my scrolling thing on my mouse is not working right, so I can't see what the hell's going on over here. Let me see here. Okay. All right, so just going back a bit. All right, no problem. Euro. So I went over the euro. Alex, using trend-based S&P almost reached 1618 of where, okay. Well, I mean, that could be a significant extension. Depends on what you measure it from, Alex. And also depends on like the time frame of your expectations. Again, if you're measuring a smaller magnitude structure, then you should expect smaller magnitude proportions. Okay, that's more appropriate for day trades. All right, let me go back here. XBI. All right, I got to wrap this up here because I'm now in this an hour. So I'm going to go a couple more minutes. Again, if I missed your question, I apologize. I do this every Monday. Hey, Dave, it's good to see you. All right, so come back on Monday, and I will do it again. So here's what I'm going to do. I'm going to do one more question from this one over here, XBI, and then I'm going to do another one in the TradingView chat. All right, so let me see what we got here. XBI. I want to buy it, or the X3. Okay, what is that? Let's see. XBI. What is that? Is that some kind of coin? I don't even know what that is. Biotech ETF. All right. Oh, that's interesting. Now, biotechs are always an interesting thing because they're driven by, while the S&P can affect them, of course, they can also have very specific news because, you're dealing with products that they come out with and they get approved for and all that other kind of stuff. So you can see them do their own thing, right? So if you're going to do individual stocks, I think biotechs or biotech group is more likely to do its own thing. Now let's see what's going on here. This is the weekly chart, right? Now the general trend is generally bullish, but the more recent, we could say the midterm trend is bearish, right? Lower highs, lower lows, and then we have a potential change taking place right here. on the short term. So let's take a look here. What's going on here? So you have a double bottom or triple bottom in place right there, and it established a higher low. Look at this. So that's an interesting structural change. Now, you see something like that, if Bitcoin were to do something like that, like on a larger scale or whatever, the S&P, that's, you know, or the bonds were to do something like that, then that's a sign of change, right? So you have a potential change here. Now is not a good time to be buying this thing though, because in order for this change to be confirmed, you need this resistance to be cleared. Otherwise, it's a range. So this is still potentially a consolidation. It needs to prove itself. I say that all the time, right? Let the market prove itself. So certainly not a place to buy. If you're long this thing, you said here, I want to buy it. All right, yeah, not now. If you want to, I mean, you can buy it and you can do whatever you want, but this is a high risk area to buy. Let's just put it that way. If you want to buy this thing, wait for the range low, okay? The midpoint of the range is highly random, so I don't see any point in buying it at the midpoint unless you're willing to take that risk. Wait for the range low. If it breaks out, now here's the other scenario, right, to consider, which is possible, right? If it breaks and clears that resistance, again, buying it there is high risk because you can get a fake out. I don't buy those breakouts at all, especially in an environment that's generally not supportive. Like I said, biotechs can do their own thing, but I'm a little hesitant in this environment to begin with. So what would I want to see? Let it break out. Let it test a resistance like over here. What is that? 106. Okay. Right now this thing is at 96. So let it at least get into that area and then let it pull back. Let it pull back and test that range resistance as a new support. And then you have a potential buying setup if you're looking for a swing trade, right? That's the area I'd look for. Again, that type of setup requires a lot of patience. I mean, you have to wait sometimes weeks and weeks, and it's very hard. If you're not a patient person, you might as well just quit this game now because you're going to lose all your money. This area right here, you know, as price is working its way up there, it can be very hard to watch that, especially if like, oh, I was right, I should have bought it. I was right, I should have bought it. And by the time I'm buying it, I can't take it anymore. You buy the top. That's human behavior, okay? And it's a liability. So anyway, I hope that makes sense. Okay, so that is XBI. Thank you for asking. All right, so let me just do one more over here, and that was Theta. And what is Beyond saying? Shout out from Florida. I love Florida. Always love your analysis. But oh, cool, since 2017. Keep the guru rants coming. Can't be said enough. Oh, cool, I appreciate that. Yeah, I'm really anti-fake guru. But you know what? We need them because someone needs to get the herd going, and someone needs to take the other sides of our positions. They amplify the herd mentality and they tell people what they want to hear. Okay. And they lie. They don't care. They're getting paid half the time to push altcoins on people. They don't care. All right. That's what they're in business to do. They're marketers. Now let's take a look at Theta real quick. Theta, and then I'm going to wrap this up. Okay. So Theta is always an interesting coin. Again, bigger picture, weekly, right? Look at the weekly. So these things are trying to change. Look how much this thing is pulled back. Okay. Definitely a general area that's attractive for longs, okay? If you're thinking of investing, I'm not a big fan of investing in these things. But look at this, right? Now that's your most recent price action right there. Let's go to the the daily chart. By the way, I don't look at smaller time frames. I don't analyze them. They're not appropriate for swing trades. They're extremely random, and they're more appropriate for day trades. All right. So if I was showing you a day trade thing, then I would be looking at smaller time frames. Now, range high resistance, bad place to be buying. Just like those other examples that are potentially in those areas. That's why I don't buy them at range high resistance levels. So let this thing, if you're interested in buying it, let it pull back. See if you can get the range low support because we're in a range. This is not a trend. It's a range. So when you're in a range, you wait for the support, right? Because typically support and resistance levels are generally more equal until one breaks. And you don't know when one is going to break. But since this is a Bitcoin follower, if Bitcoin breaks and Bitcoin is in a vulnerable situation, then these supports are going to break, okay? Because it follows. This thing does not lead. So just something to keep in mind. So what that says is the structure generally favors a support break, but that doesn't guarantee we'll get one. So a buying opportunity may show up at that range low, or it may break, okay? So you need to be prepared for both scenarios. This isn't like, you know, told me recently that they used to joke about me saying, oh, he's one of those guys. It's, oh, market's going higher, the market's going sideways, the market's going lower. That's what the market does. Okay. What I'm trying to do is I'm trying to prepare you for potential scenarios so that when it gets to a meaningful level, you have something to do. But people that are novices, they think that everything is predictable. All right. Understand something. If professionals who manage enormous amounts of money have a hard time beating the market consistently, what makes a retail trader think that they're going to just open up a chart, put some random oscillator on it, and make money as if it's a skill? Understand that. People don't think of that. They just, because everyone's egocentric, and you need to understand, like, this game, without a statistical advantage, you're just playing a slot machine. It doesn't matter what kind of information you have on your charts. It does not matter. Charts are very limited in what they can tell us. So we have to focus on the most valuable information we can find on the chart and then work with that and prepare. Basically, measure our risk. The real skill in this game, if there's any skill at all, is risk management, right? Not charts. People think that it's all about the charts. Well, if I learn more of this, then I'll know. It's not the charts. It's the risk management. Okay, just like poker. When you learn how to play poker, you could learn all the cards you want and all the card combinations you want. It's not going to help you affect the outcome of those cards because the outcome of the cards are random. Now, you can deceive people, other players, into thinking you have something, and that's a skill in the poker game, right? Deceiving people, and you can win that way. You can affect the outcome in that way, but you can't control the cards, right? So same thing with this. When you're dealing with charts and oscillators and all that other nonsense, there's no advantage. So it's basically you're playing a slot machine, and the only thing you can control is your risk. So a chart helps us find levels that we can define risk from. And then at that point, if there's a setup, it gives you some sort of confirmation, you can take a trade. Understand that, there's a good chance that this thing stops out, but your capital is generally protected because you have a stop loss order. And that's the game you have to play. Okay. It's very hard to be consistent. You have to have a very solid set of rules, and you have to look for very particular imbalances, because when I show people, there's no statistical advantage to doing it. But what we're looking for here are temporary imbalances, right? So when something gets overbought or oversold, that's a function of sentiment or the irrational behavior of people, right? And so those situations, which are temporary, those imbalances, that's where there's opportunity. And typically those are reversal points, okay? Not breakouts, especially in this environment for people that think that this is just going to continue to be a bull, and it's not. All right, I got to wrap this up now. I've been talking too much. I'm over, but like I said, I'm going to keep this under control. All right, people. So what is your next buy region to consider? Okay, I answered that question. All right, so I'm gonna just skip to the bottom here because I have to go. Okay, let me just see. If I missed your question, again, I apologize. I do this every Monday, so you can come back and you can ask me your question again. You can go back and check the answer, but from what I see in the charts, big volume, at least on the weekly, is good. It's coincidental. Okay, whatever people with volume, you're just seeing things that you think you see. It's confirmation bias. Believe me when I tell you. I measured S&P. Okay. All right. So, and let me just see what I have over here. Today, the SEC revealed that Elon Musk owns 9% of Twitter. Instant 30%. Oh, great. Interesting. I had not known that. Ben from Toronto. Where in the what's he saying here? Can we ask questions? But sometimes have specific questions. Where in the anywhere, Ben? There's what you're talking about is that there's a channel that says analysis, and you can our analysts, and you can do it there. All right. All right. Let me see. Zelta. Okay. Northern Cali. Is BTC on the monthly chart worth acknowledging as a midpoint of the range? Okay, Thomas. As a midpoint of the range, how would you think about weighting a dollar cost average at this point? All right, I'm going to answer that question, and I'm going to turn this thing off. All right, so monthly and weekly, it's the same deal. Okay, excuse me. Monthly and weekly is the same deal, and you don't need to really look at a monthly unless you're looking for a specific high or low, or you're looking for a monthly high or low. As far as dollar cost averaging or inventory, as I like to call it, this is a bad area for inventory. Now, again, you can invest in inventory at any price, right? It's really not about the price. It's really more about the size. So since you're at a range high, I would skew smaller here. Like, so for example, if you're looking to invest $1,000, let's just say, this would not be a place to be putting in a larger position. This would be a place to maybe, you buy $50 worth, which is a tiny percentage of your $1,000 investment, right? Because this is generally a high. So since lower prices are likely to follow, you're better off waiting or skewing larger at the lower prices. Now, keep in mind, Bitcoin can break that 35K and you may see 25K. It's possible. And we are in that type of environment. So that's really where you want to take advantage when it comes to inventory. Now, again, when it comes to inventory, don't get caught up really with charts. It's more about just a general area and your size. So, and also having a schedule, right? So if you're going to buy the 1st of every month or the 15th of every month, that's the day that you buy. Doesn't matter where the price is. The question is the price near a high or is it near a low, to help you determine if you should skew larger or smaller. Okay, so that's the way I like to think of inventory. But generally, these are not good prices for accumulating inventory, or at least skewing small, because we're at range highs. All right, not at range lows. It's the lows that you want to really become interested. The lows, when everyone's getting hammered, and you see all these morons on YouTube saying that Bitcoin is going to 12,000. That's when you want to start skewing a little larger when it comes to inventory, because that's when all the people are reacting. They're overreacting on the wrong side. All right, so I'm going to leave you with that. All right, people. So take a look up here, volume. It shows the tick volume, which is, all right, people with their volume. Go ahead, have fun with that. Have fun with your random slot machine. I'm just letting you know. You could, look, I'm not encouraging people to have a closed mind. You should experiment with stuff. But I'm telling you, 99% of the nonsense that's given to a retail trader is nonsense. And the reason why I say that is because there's absolutely no statistical advantage to using it. So basically, it's like playing a slot machine. All right. So unless it can help you find an imbalance, but like I said, I find volume to be extremely ineffective at doing that. So everyone has their own opinion. That's fine. But I've been doing this a really long time, so I know what I'm going to do. Anyway, all right, you guys. So I'm going to wrap this up so I don't overtalk here. I want to thank you all for taking the time to spend with me here today and answering all these great questions. Like I said, if I missed your question, I apologize. Come back next Monday, 3 p.m. Eastern time. That's usually when I stream here, and you can ask your question then. Otherwise, wherever you are in the world, enjoy the rest of your day, the rest of your evening. Thank you very much for watching.